All right, welcome to the Daily Market Recap for Monday, November 17th. In today's video, I'll be going over the action of the indexes, the liquid leaders, industry ETFs, then end the video with long and short setups going into tomorrow, like I do with every daily recap. So if you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comments section. Getting started, we talked about how volatile this market has been, and nothing has changed. Lots of volatility today on the NASDAQ. At one point, we were up about 0.6, 0.7% back through the 5-day moving average. Middle part of the day, we were selling off through the 50-day, kind of approaching those the previous open from Friday. And we ended up somewhere in the middle there, still below the 50-day moving average, below a support gap. So just a lot of volatility still. And with the S&P 500, very similar action. This actually took out Friday's low, so a little bit more weakness on the S&P 500 versus the NASDAQ, down 0.9%. Until we get a higher low on the indexes and volatility contraction, it's going to be a choppy market, and you should not be using breakout tactics to buy anything. Anything showing relative strength that's already extended and not an emerging theme is going likely to be the next group to get hit on the downside. And of course, we do have Nvidia's earnings on Wednesday, so lots of reasons for that volatility to continue. IWO, the growth stocks of the Russell 2000, inside day today, but down 1.8%. Got close to Friday's low and then closed weaker part of the range there. ARKK, also an inside day, down 1.9%, closed in the lower half and has given up the entire move from September in just a couple days. And that's kind of how market corrections start. Switching over, so we can take a look at Bitcoin. Over the weekend, we had a little bear flag at the 5-day moving average. That has cracked the downside. Right now, it's trading at $91,700. Obviously, not a bullish uptrend here. We see lower highs, lower highs, lower highs. Zooming out for like where we could potentially bounce, I see this 85K area of consolidation, 85 to 87. Uh, and knowing Bitcoin and how over leveraged people get, we're going to have to see a really big panic kind of shakeout before any snapback, high or low consolidation and follow through. So another risk off signal. Ethereum also just sitting on that $3,000 level. Maybe that's an undercut and reclaim spot where we can at least bounce. Yet to be seen. Hopefully that does happen. Getting into the industry leaders, we'll sort by price percent change today. And first thing, actually, let me just go through all the memory names. So early on in this correction on 1010, this was the day that the market environment changed. We were in a super strong uptrend. We went into an acceleration phase where pullbacks got bought at the 50-day, then the 20, then the 10, then the 5, and then this was your character change bar. Even though we went higher while all the money rotated to mega cap stocks, at this point, the kind of risk on type groups that let us in the market, your nuclears, your precious metals, your quantum names, those were getting whacked. And then it was your rockets, your rocket names, the rest of the market really starting to come under pressure, the data centers, and now the mega caps. So from that point, we've seen group after group after group fall. The one group that is still holding up is these memory names with SNDK, WDC, STX, and what was the other one? MU. And even though they're holding up relatively well right now, they're starting to show signs of weakness. SNDK put in an unfilled gap on November 3rd. Today, uppercut and failed at that resistance gap high, closed in the lower half of the daily range, still above the 5-day moving average, still some relative strength, but in corrections, themes that show relative strength are the ones that get hit next, unless they are an emerging theme. And this is not an emerging theme. This stock has gone up like 300 something percent. WDC, very similar, uppercut and fail that resistance gap, closed at the 5-day moving average. MU made new all-time highs today, still uppercut and fail, closed at the 5-day moving average. There are sellers in this zone. They're just looking for more liquidity to take out of the market as they unwind their positions. So if anything, I think that's the next group to get hit. LITE, nice gap up, rallied up into a resistance gap, still sellers present in that area. Maybe we can build out a higher low here, but that's yet to be seen. Google, off the bat of Warren Buffett buying, made new all-time highs, but then closed right at the low of the day. We'll see if we can pull back into the 20-day and same thing, maybe put in a higher low there, but still a lot of volatility here. And Google is really the only thing that held up the indexes. Without Google being up 3%, it would have been a significantly more rough day. First Solar, higher highs, higher lows today, closed right at the 20-day moving average. Nice little kind of pullback here. Solar stocks, still something that I'm keeping an eye on. We'll cover that with the industry ETFs. Eli Lilly, just phenomenal action. And this is kind of what I'm talking about. A healthcare name, healthcare emerging theme, biotech emerging theme. Memory stocks, not an emerging theme. They've already made their big run up. But healthcare stocks like Eli Lilly, they gap down under their 5-day moving average. Money rushes into them. We close basically flat on the day, right near all-time highs. Apple today, first unfilled gap down, close at the 20-day moving average. That's a warning sign. We covered MU and AMD. Semiconductors have been holding up relatively well. That's because NVIDIA has earnings on Wednesday, so I don't think they're really going to move too much before that. But even so, AMD closing below the 20-day moving average, right into the support gap here, putting in a lower high, having two gap downs. Getting into the industry ETFs, the only ETF today that was green, thankfully, was biotech. I do have a position in LABU, so we're just going to let that work because it's showing great relative strength and it's still an emerging theme. Not many people own biotech stocks, along with oil and gas and healthcare names. Speaking of which, healthcare uppercut and failed at that resistance gap, closed over the 5-day on pretty elevated volume. At this point, I wouldn't be surprised if like people are trying to chase healthcare stocks up here. So a little pullback into the 10-day moving average would be perfectly healthy. That would also be kind of like a breakout retest area. And then it's just damage like throughout the market. KWEB, Chinese Internet ETF, taking out October 10th lows, not good. XLY, consumer discretionary, taking out October 10th lows, not good. Cybersecurity, bouncing right at the support gap. This is one theme that I have some hope for because it wasn't like a monster theme off the lows. It did well, but it wasn't like a monster theme off the lows. And CrowdStrike is still holding up relatively well. So cybersecurity is like one of the tech groups that I'm still hopeful for after this correction can start to lead. Semiconductors right at the 50-day moving average. Again, NVIDIA's earnings. Solar stocks, nice inside day, a little bit lower volume than Friday. And one that had a nice big move up, kind of got supported at the 20-day every time here. A little bit more pullback into the 50-day. Your first test of the 50-day moving average would be a nice risk reward spot. But we don't want to chase anything higher in this market. We're in a very choppy market. They're using liquidity to sell into. We don't want to be buying breakouts. XRT, the retail ETF, um, new closing lows from these sell-offs right at the 200-day moving average. IGV, the software ETF, same thing, right at the 200-day moving average. XLE, little pullback to the 10-day. I still think that's a group that can work. Financials, though, this was the one that I kind of warned about earlier, where if we can hold up, then it's okay. Maybe we just go through like a 5 weeks of chop in the indexes and then we rally higher. But we uppercut and failed this resistance gap. We had a follow through day to the downside on Thursday, a gap down, week close on Friday, and then just a total unwind today back to the 200-day moving average. This is not what you want to see if the market's going to continue higher anytime soon. Nuclears, new closing low. Blockchain, new closing low. Lowest close since like, what was this, August 28th when I checked it. Home builders, huge distribution today on above average volume. And I don't really look at volume on the ETFs as much, but this is massive distribution, giving up this entire move right back towards those lows. Not a good sign for the overall uh, economy. Really quick, just wanted to cover the earnings that are coming up. We have Home Depot, Baidu, AS, Futu, PDD. So a lot of Chinese equities tomorrow morning that I'll be watching. That group is kind of soured. So especially with XPEV gapping down like 10% today, it's just a group that I need to see those bounces, those higher lows, consolidations, and then follow through to really get interested in it again. TOWL, SBLK, SQM after the market closes tomorrow, something that I'll watch. And then really Wednesday is the most important. Target before the market opened, lows before the market opens, and then the king, NVIDIA, along with Palo Alto after the market closes. So getting into the long setups, just like Friday's or Saturday's video, I have some mean reversion setups that we'll go through quickly, but couple names here. Let's sort by average dollar volume. So first solar, that solar theme is still one that I think could work, but we don't want to buy it on strength. We want to buy it on weakness. So a shakeout of Friday's low as the market pulls back. That's a spot that could work, and then you can manage your risk against the 50-day. It's a little bit wider of a stop. A secondary potential entry would be if we like gap down and then we start to build higher lows intraday that eventually takes out the daily VWAP. Then that would be an entry like probably down towards the 250 area. Then you could use Friday's low as a stop, and that would be much better risk reward. CRS, great relative strength here. A stock that really broke out on earnings up 22.6%. What was this? October 23rd, and has just built higher lows since while the market's been building lower lows. So great relative strength here. Still don't want to take anything on strength in a market like this. A shakeout of these pullback lows right around 320, that would be the buy spot after it recaptures the daily VWAP, and then your stop would be Friday's low and the 20-day EMA. Healthcare, Guardian Health. This is another one that continues to catch my eye. Was up 28% on earnings. Did a secondary offering overnight, November 4th, and even after that point, has not closed below the closing price from their earnings gap up. In this market, with a secondary offering, that is incredible strength in an emerging theme, something that I want to focus on. Still don't want to buy it on strength. Pull back into that high volume close area, the 92.80 spot would be buyable with a stop at the 20-day EMA. NXT, another solar name. You got your support gap just above the 50-day moving average. I would like to see like an undercut of the support gap and then a bounce at the 50. And then as it recaptures the support gap low on the other side of that 50 bounce, that is the spot that I would want to enter. Because these two areas, key areas for me, are so close to each other and we're in a challenging market, I want as many people shaken out as possible before I enter anything long. And that's why we'll let it bounce at the 50 and then recapture the support gap low. That would be the entry. Then the stop would be whatever the low of the day is. GMED, another healthcare related name. Monster move on earnings up 36%. Very strong action just going sideways since then. Bounced at the 5-day EMA, and I did start a 5% position on this as it recaptured the HVC right around 83. I think my entry was like 83.80. So for full disclosure, I did put it on a new position on this today, but it's in the right theme. It's acting nice. And we closed below. So a recapture of that daily VWAP stop either today's low or Friday's low would be the trade there. Next up, we've got two oil and gas names. First one, DINO. A little pullback today on lower volume than Friday's expansion, which is a good sign. So pullback into that 20-day moving average in the gap zone right at $54. That would be the entry. Stop at the 50-day moving average. PBF, nice consolidation on much lower volume today. Still want to give it a shakeout. Shakeout of Thursday's low. That would be 36.82. Recapture that area. That would be buyable. If the market or the oil and gas theme as a whole kind of really comes under pressure earlier part of this week, then the 20-day moving average and gap zone right around 35.40. That's a secondary spot that I'd be more comfortable sizing into. First test at the 20-day and a gap zone in an emerging theme. Usually great risk reward at that spot. VAL, another name that just has this 20-day moving average that I'm watching. That would be overall another higher low in that oil and gas name. ESTA, another healthcare related name. Great relative strength today, up 2.7% with a gap up. Still want to see a shakeout of the 10-day moving average and Friday's low as the entry. Stop would be under the HVC from earnings where it was up 22.5%. Then this one, NEO. It's such a nice setup that I am very tempted to take it on strength. If I did, it would be like a 2% position, a 3% position, a performance boosting type trade, not anything with real size. But it has moved quite a bit off the lows from 480 up to 10, built higher lows on the 20-day moving average. We see volume tightening up. So with that compression of volume, that compression of price, we're going to see expansion in volatility in one direction or the other. Whether they start to take down the memory names and then come for the healthcare names as this correction continues, then this breaks to the downside. If we get a normal bounce at this point in the market, I think this does kind of break to the upside and can build out some higher lows. So undercut and reclaim of this latest pullback would probably be a better, like longer lasting entry. If you want to play a performance booster through today's high, just make sure you get your stop to break even as quickly as possible, or take it with smaller size. Next, we get to the mean reversion trades, and really where we are in the market, we're finally seeing sentiment go bearish, and especially on a name like MSTR, which has been garbage basically all year long, but really since July 18th. Like this started to break down well before the market got heavy. It got under the 200-day moving average August 19th. We were talking about this as a short all the way back here. And now that everyone is finally convinced that, hey, MSTR is probably a good short, that's not the time to short. The time to short was the first crack of the 200-day, or a rejection at the 200-day moving average, a rejection at the 10-day, a gap down, a resistance gap test. Not after you make a 45% move to the downside, not after you have 4 days of volume pickup, as people are basically panicking out of this, which they should have panicked out a long time ago. There was a clear sell signals early on. And with Bitcoin kind of flushing at this point, we're likely to see some kind of snapback rally. But the thing that you need to keep in mind with these mean reversion setups is one, if you have never traded them before, don't trade them in real time. Use this kind of crop of mean reversion setups to take notes and actually understand what you're looking for before you enter the trade. So if you haven't traded mean reversion setups, don't just blindly trade them now. Take notes, build that into your playbook, and then they'll be actionable the next time we get some mean reversion setups. Second thing, you have to stay on the correct side of the daily view app if you're taking these trades. What do I mean by that? Everyone is probably starting to short this now. So either they're shorting or they're panicking out of their positions at this point. Now, that panic can go way lower than you expect. I thought it was starting to get a little overdone back in like November 7th at 220, and we're 30 points below that. And it can go another 30 points lower than that. If we zoom out this kind of previous base here, right around like the 162 area, that could be like where we actually get to. I don't know where the bottom will be. We haven't quite seen the massive volume of a true bottom in this name, but we might have seen enough volume to where we can get a snapback trade to the 10-day, which would be 30 points higher, or even the 20-day moving average, which would be about 20%. But what you want to do, all the good things, if you're trading this on the long side, will happen as price is above the daily VWAP. Because if you're below the daily VWAP, that is where more and more panic sets in. It's very hard to manage your risk. You're probably going to get chopped up trading that. Let price get above the daily view app and then go long. And if price breaks back below, get out, take your small loss, and then wait for more panic to come in. But I think this will be one of the better setups, kind of either maybe tomorrow if we get another big gap down. But we want to see people panic out of Bitcoin. We want to see volume pick up, another like large gap down, and like a recapture of that daily view app would be the buy spot. An undercut of a support gap in reclaim, like a 183.70, that could work as well. Um, but you have to stay active if you're trading mean reversion setups. The other ones, quantums, um, we have RG. Well, the one that I would trade is probably going to be IONQ. Held up the best over the past 2 days. Opened on the low on Friday, closed well. Opened or closed above the opening price and was actually positive today, up 1.3%. So that's the one that I'm trying to target. I'm always trying to trade the strongest name in a theme, unless there's like a pure blow off bottom or pure panic bottom. But what I want to see is RGTI, maybe undercut and reclaim today's low, recapture the daily VWAP. That would give me evidence that, hey, this washout is done. QBTS, undercut today's low, recapture the daily VWAP. That's a sign that the flush is over. But I would want to trade the best stock in that theme, IONQ, which is already showing relative strength. Same thing with the nuclears. LEU bounced at a support gap on Friday and then closed over their opening price today. It's down 1.7%, but overall not an ugly candle. This is the one in the theme that I would want to trade, snap back to the gap zone at like 275. Uh, but what I would want to see is SMR undercut today's low and reclaim the daily VWAP, show some signs of strength that the other stocks in the theme, OKLO, same thing, they get washed out. There's no more sellers. People finally panic and like have that final push lower before we snap back. Same thing with the precious metals. USAR right on the 200-day moving average and the support gap undercut and reclaim of that area, that would be buyable. Um, but you have TMQ, which was actually the strongest today, right back to the 50-day moving average, little gap down, VWAP recovery, that would be buyable. But we want to see METC undercut and reclaim today's low. We want to see UAMY undercut and reclaim today's low. So the ones that I would actually trade, IONQ, LEU, USAR and TMQ out of the group. The rest I would use as confirmation that the selling has subsided. Then on the short side, I think it's pretty tough to get short things that are already in major downtrends at this point in the market because we have fallen so much and we have a binary event with NVIDIA's earnings. I would focus on things like the memory stocks that haven't started to quite break down just yet, but that are showing cracks. So MU, uppercut and failed the resistance gap, closed weak, either a gap up and then a green to red move. That would be the short spot. And then you could keep your stop in the resistance gap area, or a gap down that has a mini rally back up and then gets heavy, loses the daily VWAP. That would be your short, like through today's low. Same idea with SNDK, uppercut and fail at the resistance gap. Either look for a gap down, like opening range break, play against today's high, or another gap up, green to red move. That would be a little bit better. WDC, same thing. So I use those secondary names in quantum and precious metals. I would try to go after the weakest name first. So in my mind, STX is the weakest name in the theme. It's already had like a gap down that didn't even get tested. We got rejected today at the 5 and the 10-day moving averages. A little rally up into the high volume close from earnings. That would be the spot that I would try to get short with the stop at today. And then if I can get traction on the weakest name, then I can go to the next one, like a WDC, and then the next one, like an SDK, and then the next one, like MU. But starting off with like the strongest name, which in my mind is SNDK, is going to give you more problems at first. It probably will give you the highest percent return when the group does snap to the downside, but get your traction started with the weakest first, and then you can go to the strongest ones for that extra percent drop off. Palantir, not in a short opportunity right here. We're right at a support gap and we're holding that. So we want to see a rally back up into declining moving averages. We got the 50-day, we got the 20-day, and we have the gap zone here at 182.50. That's the spot that I would look to add to my short. And then the stop would be above the gap zone high, that 185 area. APP, same thing, already has moved lower inside day today. Let it rally back up into the 10-day moving average and gap zone at 585. This to me is a late stage base that we're going to start to really unwind, probably get down to the 200-day moving average when it's all said and done. But we still don't want to chase it lower. Give it a little rally back up so we can manage our risk nice and tight. Spotify, another late stage base, bounced at a support gap, so we don't want to short it in the hole. We want to short it against declining moving averages as much as we can. Got the 200-day, or sorry, the 20-day at 647-ish, and then the 200-day at 650. Uppercut and failure at that 200-day moving average. Stop at Thursday's high would be the trade. Costco, we've covered this, I think, for the last like 4 weeks. Monster stage 2 uptrend, very large stage 3 downtrend. We've seen other grocery stores get whacked as the average consumer in America gets weaker and weaker and weaker with this economy. And we just see lower highs, lower highs, lower highs, lower highs, lower highs, lower highs. We do still see plenty of buying at this range from 905 to like 915. So unless we get a gap down that takes out these lows where this is like an acceleration move, like finally it is cracked, I would still rather short against the 20-day moving average and this resistance gap zone. So you can keep your stop above the 50-day and the top of the resistance gap area. But once this cracks, like this is a stage 4 downtrend waiting to happen. And then last, we have QBT, a quantum name that had earnings on Friday after the close, popped up. It's the weakest of the quantums, like never even got back to its all-time highs where RGTI, IONQ, QBTS went hundreds of percents over their December highs. First one to get under the 200-day moving average. First one to give up its base back from September. So this is like just a junk stock, but still with the junk stock, after it's been like bashed to the downside, it's eventually going to snap back up. And we want to wait until that rally sees some type of selling pressure where we can manage our risk against. We don't want to short in the hole down here. So rally back up through the gap zone to the 200-day moving average at like 1320. That's a spot that I would start to look for potential weakness. Then you can keep your stop at the 20-day EMA. And that's going to be the daily market recap for Monday, November 17th. If you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Have a great night, and I'll see you guys in tomorrow's video.